Hello, everyone, and welcome to the FinTech Festival in Canada. I am Mark Reisler. I will be your moderator for this panel discussion. I am here representing FinTech Growth Syndicate and looking really forward to today to discussing the topic around AI and alternative data, the use cases in finance, how they're being applied, some of the hard truths around AI and alternative data in particular, and a special area on fraud in particular. We have a phenomenal panel that we put together for you today. But before we get into them, I'd like to just share my screen really quickly and introduce us. So I'll do that right now. And hopefully everybody could see the screen. Okay. And on our panel for today, we have myself, Jennifer Arnold, who is the CEO and co-founder of MinervaAI, Luis Gonzalez, the managing director of APAC for ElementAI, and Solon Angel, who is the founder and chief impact officer for MindBridge. Just really quickly, a quick overview on FGS. We are the among Canada's top 50 fastest growing companies. We won the FinTech Advisory Firm of the Year last year and the Entrepreneur and the Women in IT Awards. We've worked with a variety of different companies across Canada, US, and parts of the globe around FinTech innovation and in particular growth strategy. So on that note, what I'd like to do right now is turn it over to Jennifer. Jennifer, we'd love to hear from you. Please introduce yourself. Welcome to the panel discussion.
Sure. Hi, everyone. My name is Jennifer Arnold, and I'm the CEO of MinervaAI. MinervaAI is intelligent automation for financial crime, specifically that leg of work that we refer to as enhanced due diligence. So everything from sanctions and PEP screening to social media and adverse media analysis. That's our sweet spot. I come at this from a regulatory perspective. I'm a major anti-money laundering nerd. That's my background, and that's been my bread and butter for the last many years. So that's a little bit about us. Thanks.
Perfect. Thank you, Jennifer. Looking forward to your insights today. Luis, you wanna tell us a little bit about yourself, a little bit about Element?
Sure. Thank you, Mark. My name is Luis Gonzalez. I'm from MindBridge. I convinced and founded the business here in Asia. Just think of it as a startup within the startup. In principle, MindBridge Asia has two key verticals we've grown. One is being financials, and the other one's been manufacturing. My background is in software engineering and business, and I was running GE Digital in Asia before coming over. So obviously, I'm more of an industrial guy, and I apologize if I don't know the domain enough of financials, but what we've done at the end is to try to influence the idea of governing AI within financial institutions, and we've partnered with the Monetary Authority of Singapore in a project for the last year and a half on this. Thank you for having me.
And I was speaking to Luis just prepping for this event, and he knows a thing or two about finance. So don't let him fool you too quickly.
That's one of my favorite pastimes. Yeah.
And thank you. Welcome. Looking forward to your insights as well. And Solon, do you want to introduce yourself and MindBridge, a little bit about MindBridge?
Thank you. Well, thank you for having us today. So MindBridge is actually a past recipient, finalist of the hackathon at the global hackathon of the Singapore FinTech Festival last year. We're also a recipient of the World Economic Forum Technology Pioneer Award, and myself, I'm a top 100 influencer in accounting. And what we do is we're trying to create a better future for everyone by improving the global financial system, one organization at a time, by bringing light to risk around unintentional errors, mistakes people do in the books of companies and government, and fraud in all the data where financial data sits, in a way that finance professionals and compliance professionals can understand quickly what happens without any coding required. And so what we do is essentially try to turn, for example, professions such as auditors into AI auditors. That's how we call them, professionals enhanced with AI. Our claim to fame is that we actually were using in investigations already where an AI provided evidence to find the world's first white-collar criminal and put him behind bars. with just an AI. And funny enough, it was an accountant.
Yeah. Is that funny, or is that?
It's very interesting. It's very interesting.
It absolutely is. So you can see we've assembled a phenomenal panel here. The way that we're going to break this down is what we've discussed is breaking this into a couple of sections where we'll talk about some hard truths for 15 minutes or so, and then we'll get into AI and some of the use cases of alternative data and AI in the financial ecosystem. And then we'll talk a little bit at the end around the use cases around fraud in particular, and how to combat fraud in that sense. And as we go through this, feel free to ask your questions along the way. I'll try my best to incorporate the questions in the dialogue and in the conversation we're about to have here. So thank you again for TFI, for Ontario, for SFF, for putting on this event. Let's jump into it. So we blended two really big topics together, the idea behind artificial intelligence and alt data. I want to clear the air, and I want to set some clear definitions and kind of guardrails about these two distinct topics. So Jennifer, why don't we kick it off with you? Can you just explain AI versus alt data, and give a use case of perhaps how to separate them in our minds, so that we have that frame as we talk about some of the use cases as we move down in the conversation?
Sure. So for our perspective, alt data is just one form of data that we consume, or that Minerva consumes in doing the job that she does. If data is the gas, regardless of where the data is coming from, then AI is the car. That's how we look at it. So in the world of anti-money laundering and financial crime, when we talk about alt data, we're looking at things like social and sentiment. We're looking at adverse media. We're looking at pulling in from open source and ICIJ and validated data leaks and items like that. So really for us, it's just a form of fuel or food for Minerva to do her job.
That's great. Solon, same definition, no difference. It's a form of fuel. You agree with that?
To some extent, yes.
Okay. What's the difference?
I think if you think about AI and data, there's a certain, and I'll go there later on, we talk about ethics, but like this is a case where the fuel modifies the engine sometimes, right? Like, so you have situations where I would call it more almost like, the best way to describe it is mutating genes, and depending on the body you put into, they will alter the body different ways. So if you remember the island of Dr. Moreau, where you have a bunch of experiments being done, that's a bit like the industry feels today to me, where people put data through the same algorithms and have completely different outcome. It's not as static. There is an element of driver versus fuel, but it's much more dynamic and sometimes much more unplanned as an outcome. Like, for example, when we've seen an AI by a big tech company in the US qualifying people of monkey just because they were Afro-Americans.
Right. So we have the distinction between AI, alt data fueling or fueling the engine of AI, but it also is able to alternate and adjust the modifications within that AI algorithm. Luis, would love to hear from you on this as well in regards to how you separate the two.
Well, so data is a very broad term, and to be fair, for the purpose of actual AI engineering, a little useless, because what matters about data is really the signals that they represent, and those learnings really are the ones that set up your right balance with the hyperparameters that you're going to do to be able to do the prediction or the correlation you're looking for. So inference modeling really requires that you understand what data represents. And then we get into very interesting exercises where, for instance, now we're working with a bank, and the bank doesn't want to share their data, but through synthetic data creation, we can model really the inferences we're looking for, the signals that help the inferences we're looking for, which means that it's much more the study of what it represents than the actual integrity of it. And it's also the continuum. Sometimes the metadata is more useful than data, depending on what you're looking at. So this is where data science meets the let's just say that data science is the refining of the fuel. And the more you learn about how you refine it, the better you can build models around it. Sometimes you can get into things like building models that calibrate their inference based on active learning, so that even if you don't have data, you have the absence of data, you can start building an inference model that can transfer from humans to the machine rather than pure data-based, right? So it's a more complex problem for sure, and it's in the best experience that we've seen is engineering of AI requires that we go beyond the current concepts of what data really is.
I love it. 3 different perspectives. This is going to be a great panel discussion. I want to get a little deeper now. And you mentioned ethics, Solon. So we have some clear definitions about AI, all data engineering behind AI, the fuel behind it. But let's dig into the ethical questions so that we have a clear frame of mind as we move on to more of the deeper conversations. I'd love to hear your opinion, and Solon, why don't we kick it off with you around some of the big ethical issues around AI. So I'll kick it off by just saying, you know, who should audit the actual AI creators? And Solon, why don't you kick us off with that?
Well, that's a great question, because if you think about homes today, there's home inspectors. If you think about safety boards for the automotive industry, they are created and financed sometimes by government. And because this is a new field, this is still shaping up. We're very lucky out of Canada. The government of Canada created their own algorithmic impact assessment tool. And they've worked very closely with industry to guide industry and have those panel and discussions. And other players such as MindBridge and MinervaAI contributed to it. So we are in the early stage formation of those bodies of inspections, of peer reviews, of sharing, and also the open source community. You know, when we started looking at some of the algorithms around financial flows, we were able to contribute and learn back and forth without even meeting the people sometimes. But the problem that comes in is beyond a single country, beyond a single organization, that the data and the bias in AI is just reflective of humans' bias. And there's over 99 cognitive deficiencies in humans that are all known and well listed. One of it is called the IKEA effect, where people put more value to what they do themselves, which is why sometimes you run into an IT department that says, we're going to do it ourselves and it's going to be better than the vendor, and then the outcome is rarely better. So in the cultural aspect as well, there's bias, for example, around age, around races, but also around positions. So if you are someone that works on autonomous vehicles right now, you're presented with the challenge, what do you do if brakes don't work anymore? The car is going at a high speed and there's two pedestrians on the road. One is an elderly, old woman, the other one is a young kid. And the AI has to decide if you crash the car and kill the passenger, hit the grandma, or hit the kid. And what's fascinating when you ask that question to AI engineers, whether they're from the Western, Eastern, or Southern cultures, they have 3 different answers. So when you build AI system, that ability to have diversity in AI, to have those peer review mechanism and those boards where discussions happen, and have the ability to some extent of, you know, vendors and IT departments collaborate very openly. Like, we are very known to be extremely transparent with some of our largest clients, which have access to our code and review our algorithms and rebuild and re-engineer them before they put them in production. That level of collaboration is the future.
Right. So Jen, I want to ask you about the same question in regards to auditing AI, but at the same time, like you built Minerva, and she's looking at this from an AML perspective and going through hundreds of thousands of records to try and figure out, you know, where fraud might actually be. But how do you navigate the bias in Minerva and her ability to make decisions?
So I think I want to tackle a couple of things there. And I think what Solon was saying about diversity and representation is critical. And also, you know, for Minerva, she's very specific in her use case or in her purpose, right? Which is she is financial crime driven, largely anti-money laundering, and unlike fraud, which is binary in many ways, right? It either is you or is not you conducting that transaction on your credit card, where with money laundering, the answer is always maybe I need to know more. I need to understand the context to understand what this client is up to, whether that's a person or an entity. So with Minerva, we started, like 2 years ago, when we started labeling and training our data sets. It was anti-money laundering experts in the room helping with the categorization and then being able to review one another's work. So it doesn't pass through a single set of hands in the beginning. You're getting a really diverse and fulsome review of the content and categorization before you let it loose into Minerva for consumption or ingestion in any way.
Right. And Luis, the last question is for you here. So we've talked a little bit about the audit. We've talked a little bit about the navigating the biases. I want to talk about consumers and the end users, like the citizens who will be using the tools at the end of the day, or the tool is here to protect us at the end of the day. How do we keep AI safe and in control? Would love your thoughts on this.
Yeah, and I think it plays nicely into how you regulate it as well, because AI requires a significant amount of engineering being created. If you go back to the history of chemicals, chemical engineering was built after a plant in Germany blew up a whole city. And it was found that you needed standards and parameters that control the outcome of this technology that was brand new at the time. So similarly, AI requires heavy engineering standards. In my view, the regulator can put the fact that you need to explain fairness in your model as part of model management before you put it in production. But then provocatively, you could say that it is okay to disadvantage certain people, right? If you're a bank that focuses on high earning, low risk profile, there's no need to change your business model just because you want to give access to low income household, right? So there are justifications that are like Solon says, very contextual to not just the country, actually to the individual business model of the bank. But you have to have the governance to be able to explain why you're doing this from a business standpoint, and that the disadvantaging is purposeful rather than unintended, right? So in my view, the combination of standards of AI engineering with a responsible regulator providing guidelines as to how things should be done, the awareness of customers that the only way that this is going to work for banks is to build trust, because that's the business of a bank, right? So if I can trust what the bank does with AI and they can explain it and they can be transparent about it, and I know that the inference models being built towards accepting my credit or giving me a loan or underwriting my risk are actually be done with responsibility. Similar to if you were to buy chemicals today, that BAS goes through ISO hundreds of certifications before they reach your home. So to me, that's the best way to think about it.
Okay, so sorry. It seems like we landed on a couple of key pillars here, and we're building the story as we go along here. Key pillars around the ethics of AI: diversity, peer-reviewed, collaboration, expertise, and some form of regulation. Would we all agree on that?
Yes, and not forgetting that the humans and the professional judgment of humans cannot be supplemented sometimes. So if you put always a human before anything happens, and you design everything with human, at the loop. So for example, MindBridge will provide all evidence of a case of misconduct or of an error, right, of fraud, before a human reviews it. And as long as you keep that in perspective, you can, compensate for a lot of things that are maybe not ready.
Yeah, so the element of human review as well. Okay, we're going to touch on these as we go through some of the topics right now. I wanted to move into our next area of conversation, excuse me, which is AI and its use cases in the financial system. So at FGS, we've mapped over 110 unique AI and alt data, companies across a variety of different functions in the financial ecosystem. Whether the AI is tackling problems from process, conversational commerce, decisioning, AI and alt data, it's really accelerated in Canada. We've seen massive growth over the past few years. So let's talk about some of the use cases in which we've seen. How I'd like to do this is I'll name a few financial services functions. Think of AI and InsurTech, AI and RegTech. And what I'd love to do is just talk a little bit about the use cases in which we see AI impacting the payments industry. So Luis, why don't I kick it off with you? where let's talk about pay text. Let's talk about how AI could actually influence some of the pay text that and the payments industry in general.
Well, I mean, maybe I'll talk it from the Asian background to maybe shed some light or something different than maybe in Canada. But FinTech, especially in Southeast Asia, is not just about secure payment. It's really about first form of financing that a lot of underprivileged poor people that are unbanked first get to touch and interact with. And to be fair, electronic payments has become a way also to control crime, because electronic cash makes it a lot harder to transact that way. And if we look at the model that China has brought to Southeast Asia, for example, I think it's really a form of advancing financial relationships with unprivileged population. And it's not meaningless in the sense that if you count the amount of unbanked people in Southeast Asia alone, you're close to 500 million people. So for us, FinTech really is a milestone of security and economic transfer that is a little more regulated and safe, right? So it creates a very different paradigm than just purely the convenience aspect of it that perhaps seen more in North America. Right?
Yeah, that's great, and it's thank you for that perspective as well. Solon, Jen, any examples or ideas that you have top of mind around AI and pay tech?
Of course. So if you Google, go ahead, maybe Jennifer first.
Oh, no, sorry. No, your, of course, answer is exactly what I was thinking. I mean, again, from Minerva's perspective, we're just talking about, I just look at it from make sure you know who you're doing business with at a very deep level, especially when money can move that fast and move that fast across borders.
Absolutely. And actually, I think doing digital payments in the 21st century without AI is madness. So if you consider that analog payments, several payments, clearinghouse and agencies have been modernizing, including in Canada. And if you go Google about projects with Bank of Canada and them, you'll see the main thing that people don't appreciate is that in the past, there was only a handful of fields per transactions. If you look with an ATM, you have date, time, amount, and that's about it. You had those massive databases of 3-4 fields. When you do digital payments, you have dozens of fields, right? Mm-hmm. And when you talk about due diligence or know your customers' problems, what about the situations where you have hidden players through other platforms? For example, 5 years ago, I was exposed to a case of a pedophile network using games on the Apple Store with credits to pass credits from one country to another. That's like completely a complete misuse of those platforms. And at the time, Apple didn't even have a compliance department looking into that. And it was the law enforcement community that brought that to our attention. So these situations like that, where you just don't have the human capacity anymore in the world. The way I say it, in the space where we are, the Jedis need lightsabers. Like, you can have all the compliance professionals that you want. You can have all the auditors and risk managers that you want. It's Jedis of the Force, but if they don't have lightsabers, at some point they can't see or do something about it, right? Or maybe they don't have the Force. But that's, to me, AI is that capacity that we desperately need in some areas. And I can go on a long time about stocks that are overvalued just by looking at their financials. And that's another topic. But like on the payment space, it's really it's a must. It's in the digital payment world, AI first is definitely the prerogative.
Yeah, I couldn't agree more. In the payment space, especially in Canada, we're revolutionizing our payments modernization process here. And it's actually leading to a lot of conversations around the use of data and how AI will actually be a part of advancing the payment infrastructure system forward. So it's becoming very popular. We're seeing a lot of startups enter into the AI and payment space. I think about the rise of, and this could be part of lending as well, but the rise of buy now, pay later. I mean, this global phenomenon of, having the ability to pay at the point of purchase and then amortizing those payments across a point of time and creating the conversational commerce that needs to actually happen in order to keep that person engaged in the payment methodology as well as informed in the payment processing stages. So this is a perfect use case around AI and payments. I want to move over to another big area that's formulating in Canada and around the world, and you touched on it before, Solon, is you looked at the stock market and you said, I could tell just by looking at the data, X, Y, and Z, and this is wealth tech. So artificial intelligence and wealth tech, we have some very big companies in Canada that have reached unicorn status. Wealthsimple comes to mind in this area, in regards to wealth management and the use of artificial intelligence in it. Would love to hear some use cases from you guys on this. Jen, why don't I start with you, and we'll go through the panel.
Well, if we stay with, I think, the example of Wealthsimple, and again, this for me, I'm not an engineer. I'm a policy wonk, so that's where I'm going to tackle this from. When I look at Wealthsimple and I look at their crypto business, so by definition, they're high risk, and everyone who touches that book of business is high risk. So how are you doing your onboarding? How are you doing your enhanced due diligence? And how often are you repeating that EDD process to make sure you have a beat on your customer over time? And then what does that cycle look like? Like, are people there for a long time, a short time? What are you doing in the way of behavioral analytics in terms of what you expect someone to do on your platform versus what they're actually doing on the platform? How are you detecting that? And then how are you running that down?
I agree completely. Well, so I was probably one of the first customers of Wealthsimple for crypto. I've been on it for a couple of weeks now, but
I'm going to Minerva now.
So it's fascinating to me, because when you see what you see with Wealthsimple is that AI first, robot advisor first principle, and during the crisis, they've outperformed some of the biggest fund managers, right? During the crisis at the beginning of this year. And I think that speaks volume about having a more scientific approach versus relying so much on human professional judgment in the decisions. And what I found very interesting, not just with Wealthsimple, but how pioneers are always held to a higher standard than what is done. So for example, I'm part of a group of founders called Fresh Founders, where it's 100 founders that help each other. And one of the founders created the world's first Bitcoin ATM years ago out of Y Combinator. And you should see the due diligence they do. They even had cameras on the terminals and stuff, was way higher than any other ATM in the world. But somehow they had 10 times more scrutiny than the largest bank's network. And so I think that's a very stressful time for innovators when people are putting higher standard. But you know what? That's the way it should be. It's great, because it makes the whole profession move forward with a higher level of due diligence, a higher level of sensitivity to those issues. So I think it's a great thing to embrace. But in the space of wealth tech, we're just at the beginning of what's possible. There's really a lot more work. There's a lot more markets and capital markets that could benefit from a more scientific approach to due diligence, but also to decisions of investments on the asset management side.
I think that scrutiny that you're speaking of is only going to increase, especially for anybody in fintech, crypto, and neobank space, because from the interviews and conversations that I've had with folks in that space, everyone's kind of skating by the seat of their pants when it comes to compliance with their anti-money laundering regulations. You know, the goal is to grow and grow fast and acquire customers. So no one's really interested in diverting funds from the growth engine to build out a compliance team. Totally fair. But that scrutiny is only going to continue to increase and get, I think, more harsh and more brutal. And I think we'll start to see fines relatively soon.
Yeah, and in this space, especially, you know, what kind of comes to mind is what happened with Robinhood, and you know, we can't go through a panel conversation in 2020 without mentioning COVID. So we have to talk a little bit about COVID and what happened down south in the U.S. in regards to Robinhood. And I remember the story of you know, this 20-year-old who was getting their checks from the government and investing it into Robinhood and the automated platform, and then a breach happened or something along those lines, and he now had to pay or lost, you know, $50,000 or $100,000 of his savings that he originally had invested into there. So this is an example around, some of the watch outs behind that. Luis, do you have an opinion or some use cases around wealth tech that you've been seeing in Southeast Asia and some of the work that Element's done?
We've been lucky enough to work with the wealth fund here in Singapore. And to be very frank, there's a lot of things that are starting to see. I see a democratization of insights, which means that actually forget about advisors. The idea is you would create your own personal, assistant or investor, virtual investor based on your priorities, and it will do the digestion of some of these insights that today, to be fair, is really hard to get. That get democratized, and then I think that underwriting a stock to be able to really understand the risk, it's evolving so much that I think there are models of understanding volatility that are outdated. And this is not something that I came up myself. I hear people, very sophisticated investors of 20 years here in Singapore, saying, I don't think we know how to measure true risk of the market anymore.
Exactly.
Because the behavior of the market is so different. Robinhood is a great little snippet. As we were talking before we come in the call, when you have a digital generation between China and India joining the market and betting or shorting something in NASDAQ, their power to pump or completely reshape the behavior of the market. It's funny because again, I think we're in a bubble. Yeah, how can you tell? How about we're in a bear market? How about we're in a bull market? At the end of the day, the dynamics have changed so much that technology is going a lot faster than ability to understand their impact. So for me, wealth tech is one of the biggest growing areas that none of us really can tell where it's going to end, but it's very exciting. Of all the observations I have in financials, for me, wealth tech and anti-money laundering are the two most exciting things.
And we at MindBridge, what we're obsessed about is how much risk there is at all times. Like what we started is the world's first automated risk assessment platform, and wealth creation only goes so far if you have no idea of the risk inherent in every position you take. And I always like to remind to everyone that Terranos sounded great. $700 million raised, sounded a phenomenal technology. And at no time, anyone had a financial audited statement produced and had an idea of the risk inherent in the revenue recognition. And those are the challenges of the 21st century. And my fear, and if you ever talk to Harry Markopoulos, the whistleblower on the Bernie Madoff case, him and me exchanged very passionately on this topic on many venues. And he wrote a book called No One Would Listen. I invite everyone to read it because nothing has changed since Bernie Madoff in the global capital markets.
Yeah.
Yeah, that's a statement and a great book to read as well. I haven't read it, but I've heard it's on the to-do list for sure. I want to talk about
transparency up to wealth tech. It's going to be a whole booming aspect of thought leadership and new startups because it's needed, right? On the way trades are made, a higher level of accountability on how trades are made.
Yeah, I couldn't agree more, Luis. I couldn't agree more. I wanted to talk about one additional FinTech area sector, which is the lending sector, and in combination, it could be the personal financial management sector as well. And this is where we're starting to see a lot of growth. We've seen over the last 10 years in Canada, in particular, 111 companies come into this sector, of which 50 or so are AI and alternative data driven. And this is a big sector. And where we're seeing a lot of fintechs entering is in regarding the decisioning from the lending value chain perspective. And we talked previously when we discussed the ethics behind decisioning. But I really want to touch on, how do we remove bias in decisioning? How do we make sure that Joe Smith, who looks very similar to these 20,000 other people, deserves the same chance of getting this loan as Jane Doe, who looks like 20,000 other people that has a little bit better credit? How do we remove this decisioning, this decision bias that's present in today's world in regarding credit evaluation and underwriting, and start to leverage the use cases of AI to help us here. Solon, why don't you kick us off here and chat about your experience here?
Sure. So I'll start with what I think is the biggest opportunity, and then what are the things that we need to be cognizant that can be holding us back as an industry. The biggest opportunity is on the infrastructure. The data connectors and the data fusion happening between banks data and accounting data, for example, have created things like QuickBooks Capital, right? So all of a sudden you have a software vendor of accounting software that is providing, cash advances, and same with Shopify Capital, using data science at the front and center of everything they do, and just relating one data set to another, having a whole different level of due diligence done automatically with almost no human involved. Have a look at ClearBank, right? Connecting to Google Analytics and your Stripe account, and also then they're able to really mitigate risk and take incredible position. And it's a win-win for the entrepreneurs and for ClearBank and their backers, right? So those are the incredible opportunities of our time, and that has not hit Main Street businesses yet.
No.
And that's,
why do you think it hasn't?
It's just a matter of time. It's just a matter of time.
Is it a matter of time, or is it a matter of legacy system infrastructure updates? The typical excuses that we hear from big banks.
So I'll share the story of the anti-brake system. Few people know, but the ABS system that every car has today was invented in the 19th century. The first electronic ABS system was used in the 70s on the Concorde to stop that high-speed plane from landing too far, right? And then most cars in the 90s were sold with ABS, but it's only in 2004 that the legacy regulators made it a mandatory requirement that every new car, has to have ABS. Think about it. It took 100 years for something that saves lives. In this case, having the ability to deploy capital fast and to the right person, save businesses, save jobs in some situation, and create jobs. And the beautiful thing is that this is happening in years, not 100 years. We now have a pace of innovation and discussion, especially I see from banks and IT leaders in banking, they're not as reticent or resisting change as people assume they are. In fact, a lot of them are very curious and very willing to experiment. That has been our experience with this. Things have changed a lot in the last 5 years. The real risk comes from the misperception on what I called earlier, holding pioneers to a too high level compared to others. The first case of discrimination in banking was in the US, where they used algorithms for lending. And then they basically realized that because of bias in data, they were lending less often to minorities. The bank got fined, got caught years after unfortunately hundreds of cases, right? But guess what? People said, well, you see, the AI is not as good as a human for that. But wait a second. There was countless cases at the counter of discrimination on Afro-Americans, and you can't pause, like with an AI system, you can pause, go back in the data, do a forensic evaluation of what happened with the algorithms, and then correct that and prove when there was wrongdoing done. When a human at the counter and there's no one watching does those decisions, how do you do that? You can't rewind back in time, open the skull of someone and the brain of the teller and say that they did discrimination. So there's abilities, there's opportunities all over. There's opportunities to do a better job. There's opportunity to help more people. And at the center of that, AI is essentially opening those opportunities.
So sorry, Mark. I think there's another point buried in there, and that is around the regulators, especially when it comes to the banking industry. They are not comfortable with taking a human out of the loop. So, our job there is to have AI that assists the human until they get to a place where they're comfortable where you can pull the human out of the loop. But it's like, you got to boil that frog slowly when it comes to the regulators, or they'll jump out of the pan.
And that's fine. Yep. And I think there should be always an element of override. Even in the world where you have Teslas in level 5 autonomy, or you have a helicopter that autonomously dropping people from one rooftop to another, there should be a button where you can still take the handles in case of malfunction. I think that should always be there. And as long as we're not trusting the machines enough, I think we should stay in control of it.
Mm-hmm. I wanted to add this one thing on a different approach of lending potential, because I see a lot of non-financial based lenders coming in because they have better data to underwrite. And in
Got it.
Indonesia, for example, in Thailand, these are places that are blessed with very rich data, even though they don't do much with it yet. You start seeing things like peer-to-peer lending and microstructured lending. This means a third party pays my bill for me, and I now have a construct between me and that third party, which both of us are not institutions at all. So when you have network-based like that, or peer-to-peer lending, for example, or micro loans that are now between organizations that have never been financial organizations before, it escapes some regulators in Asia how to best regulate that, and because it happens a lot on the underprivileged population, there, I micro lend you $20, and then you pay me next week, $11 out of that. Regulating that and stopping the use of the technology for that purpose is actually being very difficult. So in my view, the biggest growth of lending won't happen in the financials, because underwriting models for risk, the data is richer elsewhere. If, for example,
Yep.
if I have a relationship with iPhone, because I'm 17 right now, and I've had an iPhone since I was 11, they know me so well that when it comes time to buy a mortgage, why would I buy it with a bank? They can underwrite me from when I was 11. They know exactly who I am and how I behave. It's a great proposition that I use to scare bankers, like I say. And maybe I'm wrong, but I still haven't had a good answer from any banker telling me otherwise.
Yeah, Apple is the new bank.
Well, and there's this attitude that we will buy the startups. Okay, good luck buying Apple, right? So that's the whole point. Is that I think lending is one of those great green areas where you'll have another suite of entrants that are not playing by the financial rules, right?
Yep, I couldn't agree more. My philosophy behind this and overall belief is every firm could be a lender at the end of the day. You're thinking about lending to the SMB segment, the small medium business segment, and you're a supplier or a manufacturer of goods to that consumer or that small business. The data that you have on that small business is proprietary data. That's data that banks wish that they had to understand the level of price and product construct that they should be selling to or providing to that business that's learning from you or that wants the loan from you. So I mean, I couldn't agree with you more.
Right. So now you can have a circular business. It's fascinating what can be done.
Yeah, I couldn't agree more. Okay, I want to get in. I want to get into our last segment here for the last couple of minutes, and it's a good segue when we talk about lending, because there's a lot of due diligence that needs to happen in order to know your customer, to ensure anti-money laundering and anti-terrorist financing and combating criminal crime and fraud, et cetera. So earlier this year, PwC did a great study, a global study on financial services. Overall, they saw fraud increase in 10 of the 13 categories of fraud that they surveyed, of which the top 4 are customer fraud, asset misappropriation, cybercrime, bribery, and corruption. Not hugely, hopefully everybody can still hear me. And where we went to from there is Canada's been spending a lot of time combating the idea behind fraud, behind anti-money laundering and anti-terrorist financing. So we're lucky to have Jennifer, Solon, and Luis here to chat with us about this because they are experts in this area. And I'm hoping that, Jennifer, we could start with you here. And what I want to do is just talk about some of the big use cases that we've seen in around due diligence, enhanced due diligence, know your customer, anti-money laundering. I'd love to kick it off with you.
Sure, thank you. I want to go back to a metaphor that Solon provided us with earlier, which was actually brilliant, which is the Jedis need lightsabers. And so if we look at a large financial institution and they have 300 plus investigators on staff doing their job, the folks being tasked with actually identifying and stopping financial crime, they haven't had a major upgrade in almost 2 decades. They have no lightsabers. They have tape in that. Like they've got no tools to do their job faster and better. They've got nothing to facilitate better risk decisions being made in a more timely manner. They sit on backlogs of cases that go uninvestigated because they can't stay on top of the work. So when I think about RegTech and when I think about Minerva specifically, being able to accelerate that investigation process so your FI is no longer sitting on a backlog of cases, so that you could move into an almost real-time existence when it came to examining alerts in cases, being able to take data from that deep contextual data on your client, feeding it into your alerting tool to reduce the noise on stuff that's coming back to you. There's so many things that can be done in that space. And really, it's about education and getting FIs comfortable and letting them have the human in the loop for now, to get them used to the idea of the process that an AI can go out and collect, aggregate all of the data that they need to satisfy the regulator, provide some risk analysis on that information, do sentiment and context and risk, and be able to give the investigator something to work with, give them back precious hours to do investigation and analysis instead of sucking their lives away by Google searching John Smith plus money laundering, because that is an insane way to do this work.
Mm-hmm. And just one quick follow-up question there. So Jen, you used to be a banker, right? Like you used to be in the space, I think.
Yeah, I was at Wells and over at CIBC as a head of AML transformation.
Right. So you actually know that inside of these organizations, that's what they're doing. They're actually Googling person's name plus whatever kind of suffix that they want to Google there in order to aggregate the information. So what you're saying is that there's a secret sauce that AI has here, or that AI can do by bringing multiple data sources together to streamline the efficiency of going through that fraud file.
Yeah, and it's a beautiful recipe, right? Where you're getting back more relevant information that's highly accurate, that provides like a productivity gain like nothing that you've ever seen, as well as being able to, make your regulator happy with highly compliant documentation that you did everything that you were supposed to do when you went through the vetting process with this client.
Yeah, and what you're seeing is does this actually lower the crime rate in regards to fraud for a bank? Like, are we seeing that? And just kind of walk me through like the value, the end state value that an organization would see at the end of the day here.
Well, I'll give you a real example from an institution that I will not name. But again, 300 plus investigators getting through a half a case to one case a day, facing 50,000 cases or more in a year.
Wow.
You're never going to be on top of your work. You're never going to find Jeffrey Epstein until years later, because you just can't get on top of that stuff. So being able to execute a single investigator, be able to get through 5 to 10 cases a day is a really meaningful gain. And whether you choose to take that gain as a reduction in headcount or an increase in capacity so that your organization can actually work with its revenue generating partners, get new product and service to market faster, or cover from a transaction monitoring perspective more products and services that you have not currently onboarded into that system, those are meaningful gains, both from a compliance perspective, but also from a productivity and cost management perspective. Those things go hand in hand.
Yeah, I think I get it now. Solon, what about from you? I'd love for you to just explain kind of the big use cases that you see in AI and alt data to combat fraud.
So the best way so very similar to what Jennifer just explained is when you have humans that have limited capacity, like think about, take the case of Wirecard, right? This is a prime example of small data, big problems, of big data, many small problems that aggregate to a massive problem. And humans don't have limited cognitive capabilities and time. In the case of an auditor, right, if you think about it, you will need an army of accountants to look after an army of people doing fraud, but you don't. Yep. Usually when there's an audit, there's a small team of audit looking after the whole organization. So the problem that we had to solve by creating those legions of AI auditors is to empower very quickly everyone with the Force lightsabers and nukes to have the ability to very quickly. So the best way I can describe it is when you talk to the clients of our clients, they say, for example, that the AI auditors ask more relevant questions when they start using our software. and they can feel the qualitative aspect of AI, which is invisible. And so when you think about, you're going to see in Canada, one of the 5 largest accounting firms soon is going to do a press release. They're going MindBridge all over, and they said they're going to reallocate the resources towards growth of the time they're saving by doing a better job with less risk inside their services. So the problem of also small data, big problem, if you look at the proof of concept and the written reports by Bank of England on their test with MindBridge, they talk about that problem where when you have very small data sets and there's one line that is the problem and you have very little context, no humans can solve that problem. This is where a highly sensitive AI can, with a very accurate ability to do anomaly detection. Those are the real life problems that we can address by really quickly honing on where the fraud could be, on where, not even fraud, but just interest, right? And so the most useful AIs are the AIs like, for example, when we talk about Minerva or MindBridge or some of the project MLTI does, is AIs that can relate at scale things that humans don't have time to do, right? If you have AIs that can automate that and relate data sets, relate sources very quickly using best practices, without even applying anomaly detection, but just digitizing the human cognitive process, you get incredible value. We're talking like dramatic reduction of friction, much faster investigation, and honing onto the problem super fast.
Luis, what have you noticed globally in this fraud space? So, we have some great examples from Canada that Solon and Jennifer were talking about and entering into Europe. But what have you really noticed from a global perspective in fraud?
So our approach really, we're not a banking domain firm, therefore we never really sought out to solve the problem in anti-money laundering. But at the end of the day, anti-money laundering is similar to a cybersecurity problem, which is really a problem of intelligence and sheer volume, right? Detecting the false positives for the real positives quickly. So we used technology, deep learning based technology that allows you to go a lot stronger, a lot quicker on regards to inference detection and anomaly detection, especially temporal anomaly detection, which that meant being able to identify the behavior of the things that we know and we don't know. Now, our purpose was at the end to provide transparency to the inferences that models could be used. So even existing AML models need transparency, right? What is that explainability of those models and why they're identifying those as a positive? And sure enough, once you provide explainability around these inferences, you actually find a lot of black holes, things that the inference is not reliable. And we stumble on that as a great source for money laundering. Why? Because money laundering will hide where inference models exist. And when you think of accountability and transparency put together in a bank, obviously some of the designs of how to do money laundering come from ex-bankers, people that understand how to avoid scrutiny, right? So when you apply this technology to finding abnormal behavior of transactions in a manner that you can do it in the millions or billions per minute, for example, then it's not that you have an explanation as to why it's anomalous, but the fact that you have an area that is very anomalous that no one's looking at already starts guiding to an elimination process that could get you to anomaly detection. So I think that the rules of anti-money laundering are going to change because the technology is going to start shedding the light on a lot of other things that haven't been put out to the regulator, and the regulator is going to start having tools to perhaps put better frameworks around not chasing what is being found, but more importantly, chasing what has been hidden, right? And that's one of the trends we've seen here in Singapore is that the monetary authority in Singapore is being very proactive at driving these fee principles because they have a great potential for things like this one.
Right. So I mean, if I could just summarize that really quickly, it sounds like the fact that this is a machine problem to solve in first, and then human intervention to look at the most critical cases afterwards. And it's a perfect example of how MindBridge and Minerva and some of the use cases that you were talking about, Luis, are utilizing data and AI to get ahead, to create efficiencies, and also to combat this this fraud case. So I want to encourage everybody that's listening right now to ask questions as much as possible. We got 3 minutes left. I'm going to move into a rapid fire section, and if there are any questions, we'll bring them up as they come. But rapid fire, Solon, we'll start with you. Where's your big bet in finance and AI?
Yeah, I would say really in data fusion, in having the ability to fuse data sets that today don't talk to each other, and using AI as the link between the two.
Okay. Jen, what about yourself?
Not so different from Solon, the more robust use of contextual data to understand a client and a client's behavior compared to their own behavior over time as a form of anomaly detection.
Okay. And Luis?
I think along the lines of what they said, but I would go as to tell everyone, learn about federated learning and encrypted data sharing. Actually, it's not even data sharing. It's data learning sharing. It's a much more sophisticated architecture for it. And once we solve for that, you're going to start seeing data markets and data trust being put around legislation with data oversight. So it will become more the ability to share learnings around data. So homomorphic encryption and data federation, it's learning federations, right? It's going to become a thing that we thought it was going to be 20 years until it come here about 3 years ago. Now the horizon for it to arrive is a lot closer, which will solve a lot of these data sharing and inference sharing challenges we're having today. Once you have that put under one financial sector in one region, that it's going to open the doors to a lot of other things that before we just weren't able to do.
And in Singapore, with transaction-based reporting, that's going to be on steroids.
That's correct. And we've got to do it a lot faster so that hopefully we can. You know what's funny about that though? The technology is still Canadian. At the end of the day, what for instance, Dr. Richard Simmel at the University of Toronto is doing is informing what we're trying to do over here. So something to be proud of and something to reflect on, because we got to have a lot more companies like Minerva and you guys being over here.
Absolutely. And then from my perspective, I'd really like to see the bets being made in personal financial management. I think that AI is the perfect tool in order to help relieve the world behind financial stress and educate us in a way where we're using money correctly to alleviate debt, alleviate stress, etc. At this point, there's no other questions that came in. So what I'd love to do is just close off our session here. Jennifer, Luis, Solon, thank you. This was phenomenal insight, phenomenal perspective. TFI, Government of Ontario, and Singapore FinTech Festival, thank you for hosting a panel on AI and all data. And we look forward. That concludes day one for today, I believe. And thank you for all that attended. And please join us on December 10th at 8:30 a.m. Eastern Standard Time for the second and final day. Thank you again. And thank you all for listening. Take care.
Thank you.
Thank you for having us.